welcome to everybody. I am Shrija Agrawal, and you are watching the fourth dispatch of a series of thought leadership discussions with Khaitan Company as part of our series Future of Dealmaking. In the last three series of discussions, we touched upon various aspects of dealmaking. In our first episode, we deep dived into private equity, an asset class which really sits at the heart of dealmaking. In our second episode, we dived deep into the drivers for corporate restructuring. On the third one, we took you to the deep dive into the world of M&A. In our fourth episode, we will try to endeavor and take you as to what truly are the drivers for consolidation and what truly the opportunities in the world of financing available to India Inc. right now. The question really becomes pertinent and important for a variety of reasons. India Inc., which was already reeling under the pangs of slowdown, finds itself in a double whammy, of course, hit by the pandemic. And what better than being joined by two partners at Khaitan Company who do this as part of their daily jobs. Please help me welcome Sudhir Basi, who's Executive Director at Khaitan Company. Also joining him is Arindan Ghosh, partner at the firm. Sudhir, my first question to you really is that, what I sort of referred to in my intro remarks is that how is India actually thinking about fundraising options right now in the current scenario? Take us through this. What really is the kind of color that you can give me or on the ground conversations you're having with some promoters out there?
So in the current environment of the COVID lockdown, there are lots of businesses which have been impacted. And due to that, these businesses need to raise money. So that is the bottom line that we are looking at this point of time. However, what are the modes in which these corporates can raise money? That is the main conversation that we are having with these corporates as of today, the promoters as of today. So if we look at the scenario, what these corporates are looking at, they are primarily looking at the liquidity. So, and some of them are happy with the debt at this stage because they don't want to dilute at the current prices, and they feel comfortable that this is a temporary blip in their performance, and over a period of time, the companies will come back and they will be able to repay their debt. But there are lots of companies where there is a need to get equity into the company, and therein the conversations are around that how equity can be raised. And in this scenario, what are the various modes people are looking at from the equity perspective right now is primarily the rights issues, the qualified institutional placements, and then lots of, in addition to these two modes, there are number of, especially in the large cap companies, we are seeing the significant shareholder or promoter diluting their stake through block deals. So these are the primary conversations which we are having. IPOs, the conversations are not as robust as we are seeing in these products.
Did you sort of mention that, for IPOs, the conversations are not as robust as one could have imagined. So why is the preference being shown towards rights issues? What really are the reasons for this? We just saw one mega rights issue being concluded recently. Give us some examples from, those kind of transactions that you've undertaken.
Yeah. So you see, if we go back into the history, whenever there has been market crash, thereafter, the investors become pretty choosy on which are the type of stocks they are willing to invest in. And in that scenario, it is much easier to invest in stocks where there is a historical price performance, because the investors have seen that stock moving over a period of time. It declined, it came back. So there is a benchmark which is available. And that's why in these scenarios, the first type of deals which hits the market is QIP or block deals that I've talked about earlier. And the rights issue becomes important because relevant here in this particular situation is because one, that there is a free pricing in the rights issue. You can price it at any particular price. So even a company which is not doing very well, that company can also attract investors by offering them a discount to the prevailing market price. And secondly, in a rights issue, in Indian context, the promoter can always backstop a rights issue. So if promoter have money, then this becomes a very relevant type of product to come and hit the market. But going as far as the IPOs are concerned, because there is no historical price which is available. That is one. Second is that in India, if you see majority of the IPO will fall into the small cap or lower end of the mid cap market segment. And if you see the performance of those stocks as of today, they have not come back to the same levels or near to the same levels as they were pre COVID lockdowns and crisis. So it is going to take for some time. There need to be clarity on the performance of the companies post COVID, and then we will see more IPOs coming. I think in the meanwhile, IPOs of what we call so-called trophy assets, where people will, irrespective of what is the timing, people will come and buy those IPOs. Those IPOs may happen, but the real IPOs of small companies, and I'm not talking about small company, I will classify an IPO which is 500 crores plus, with market cap of 2000 odd crores type of IPOs. So those real IPOs, I think there is still some time, and the investor would like to see how this whole pandemic plays out in those companies, and then we will see more action on that front.
Arindam, I sort of come to you. We heard from Sudhir in terms of the opportunity landscape, and he very clearly sort of defined that, while there's some activity and action being on the rights issue, and also laid out the reasons for the same, perhaps the IPO market is seeing a bit of a pause, and rightly so. Give me some sense and, the drivers for consolidation. What should the drivers for consolidation in the current environment, and what really are the conversations you are having with promoters in that regard or that bucket?
Right. So when we're talking about consolidation, if the promoter needs to be purchasing the stock from the market, then it becomes very important that at what price is the promoter going to purchase the stock. Towards that, what we have been seeing lately is that, delistings are the flavor of the season. There have been about 3 which are already launched. I know of a few more where people are trying and reaching out to us and asking us questions. If you ask why delisting, answer is very simple. The price at which the stocks are currently at, they are at a huge discount, or rather a large discount to what they were trading at earlier. So when the promoter is pitching for the stock and saying that, look, I am okay to purchase it at X price, then the price that he is quoting as of now looks like it is pretty huge, at a huge premium to what the stock is currently trading at. Although, the final price is determined by a reverse book build process, which again throws in the ball at the and the shareholders can, historically we have seen that the shareholders can actually take the price right up to in some cases 250% of what the actual price was. So although we've been seeing quite a lot of delisting proposals coming in and people have jumped in, I would say we'll have to actually take a look at whether delistings are actually achieved and people, promoters actually end up getting that 90% and consolidation that they actually wish for.
So just to add to what Arindam said, historically, if you see at delistings, the most of the delisting have happened at a premium to the market. So ultimately, if you see the way the SEBI has designed this mechanism, SEBI has designed a mechanism in which the power is primarily with the shareholder, and shareholder quotes a price, and then it is for the acquirer to decide whether he wants to accept or reject that price. So this is a very good price discovery mechanism that is there, where it is the holder, which is the seller, which is quoting the price, and then the buyer can either accept or reject it. So if you ask me, is delisting good for the existing shareholder? Yes, it unlocks value for the existing shareholder, because they are unable to sell their stock at premium in such delisting offers.
Sure. We spoke a little about delisting and spent some time on that. Take us through, the block deals, and bulk deal. Are we seeing more of that? I mean, just yesterday there was one large transaction on the block deal front. So, what are the triggers for some of those kind of transactions, and how are these transactions in the pandemic time different from the so-called normal that we have seen?
So, if you see, as I mentioned earlier, that uh, these are if I see most of the block deals which have happened in this lockdown period, they are primarily from large cap, whether it is HDFC, Standard Life, whether it is the ICICI Lombard, whether it is Hindustan Unilever, Glaxo selling in the same. These are, and yesterday's embassy retransaction. These are all very large transactions from companies with huge market cap and lots of liquidity. And these, again, at the end of the day, are the companies which are not that much impacted because of their pandemic situation. So in this kind of scenario, these are the trades which can be launched pretty quickly and with no market risk. Almost market risk is just overnight market risk that the issuer is taking when the markets are closed. Hence, these are the deals which will definitely happen in this kind of environment. Though in any environment these deals can take place, but this is uh, here the investors are comfortable. They understand these stocks very well. They are comfortable with the view on these stocks that they understand what is the impact of this COVID on these particular stock, and hence they are willing to put huge amounts of money. And I think put together these block deals may be running into some 3 or 4 billion or maybe more. I think maybe 5 or 6 billion. I have not done the count, but that will be the sort of number that would have got raised through block deals in this pandemic. So this will definitely happen in all these kind of situations.
So interesting. So sort of laying out the true drivers for the block deals like this for us today. What about the buyback options? Are we seeing some new features and types emerging in the buyback bucket during this pandemic? What really are those? Give us some sense and color there. Arindam, you want to pick that up?
Yeah. So when we're talking about buybacks, it used to be a preferred method to return, money to shareholders some time back. But suddenly it lost its sheen. That was because of the buyback tax, which was this fiscal. And, the moment corporates learned that, look, they have to be paying a tax, and it's a huge 20% tax, which is applicable. Suddenly, buyback offers have dried up overnight. There was a spate of buyback offers which have happened, and we've seen very few after that. For instance, I think there is an NIIT buyback offer which is on, but apart from those, nothing's improved during this COVID times. It's actually lost the whole point of returning money and company paying tax on it.
What do you think? Where do we go from here? Will we see more buybacks, going forward from here during these unprecedented times? Or do you think the buyback tax has really taken the sheen for permanent?
I would say, the buyback tax has actually taken the sheen of the buyback product. When we speak to merchant bankers and they're like, they have actually discussed with us saying, although quite a lot of representations got made at that point in time, but nothing came through.
So did you want to add to that, the buyback bit a little?
I think echoing the sentiments of Arindam, it makes no sense for you to pay 23% tax. With surcharge, it is almost close to 24% as buyback tax the company has to pay. And compared to that, earlier, why most of the companies were going in for buyback? Because on payment of, there was a dividend distribution tax of almost 20%. And in buyback, there was no tax. So this was a tax efficient way of returning capital to the shareholders. But now the situation is opposite, that the buybacks tax is still there. dividend distribution tax is withdrawn. So now for a small shareholder who is not in the top tax bracket, buyback is not an attractive option at all, because company is spending, because ultimately this 24% tax is nothing but going out of the pocket of the shareholders. So the company can put more money into the pocket of the shareholder through dividend than through buyback. So that is the reason it has lost sheen. But still, I think in some cases there will be buyback where the it can be seen as a mechanism of consolidation for promoters. But again, the quantum of money which is required to be spent by the company and the consequent increase in the promoter shareholding, the maths most of the time doesn't work out.
The math doesn't work out, and also sort of what Arindam sort of pointed out, that the buyback tax has really been a dampener. So we spoke about quite a few options here. We spoke about the block deals. We spoke about buyback. We spoke about delisting. What about the QIPs here? I mean, are we also seeing traction for that product? Give us some color sense there on the QIP bit.
We are seeing action on the QIP front. I think 2 deals have already happened. Kotak has happened. Thereafter, JM Financials have happened. So in the QIPs, where we are seeing more action is primarily on the banking and NBFC space, because these are the institutions who need to raise capital in these uncertain times, so that if there are unexpected or expected credit losses because of the COVID, still their capital adequacy is maintained. So we are seeing action there, and so far it is the companies which I will put in the category of that where investors want to put in the money. Those are the sort of companies who have come out with the QIP, like Kotak Bank, where it is not that they are suffering, they were low on the capital adequacy, they did the deal, but they did the deal so as to have more capital available, so that as a bank they can show that we are solid, even if there are some losses here and there, which is bound to happen for any financial institution in the current environment. We have the wherewithal to take those losses. And even the other fundraise of JM Financial, it was primarily what they said is a confidence capital, not that they needed the capital per se. Their capital adequacy ratios are also pretty good even prior to the QIP. So that is the action we are seeing. There is some now discussions in the other sectors also, which is coming up. So this is a product, if you go back in 2009, post the financial crisis, in that year saw lots of QIPs, and this was the first product to go off the block at that point of time. So we believe that during this period also, we will see more QIPs in the coming months. And if the markets remain stable, then there will be more launches.
And then you want to add to that. So they just mentioned that, we have seen some bit of activity during the financial crisis also on the QIP front. What are you seeing and observing on the QIP bit particularly?
I would agree with what generally, Sudhir has said. There will eventually be a pickup for the QIP bit in the times to come.
Okay, so we spoke about quite a few broad, equity sort of issuances structures. Now my question really becomes is that, what has a regulator done? For instance, what assistance specifically has done by the regulator to undertake equity issuances? What type of issuances are we seeking? Are these specific types of companies and sectors undertaking transactions? Give some color there.
So if you see, the regulators have been very proactive, and we are thankful to the regulators that they have been proactive in this time. And currently the way the regulator, we are interacting a lot with them, they are saying that if you have issues, come to us, we will try to solve whatever is possible to solve in the available regulatory framework, and we need to relax something, we will do that. And they have done number of things. So I want to commend how the regulators have reacted to this crisis. They have been of real help, and standing next, shoulder to shoulder with the corporate India to help them in this crisis. So I think if you see on the fundraising side, they have done number of situations, and why the say a rights issues have become very attractive is that they have allowed relax the eligibility requirements for fast track issuances, the issuances where SEBI doesn't review the transactions. So that what has been done by SEBI. In addition, now the rights issue has become fully digital rights issues. So the offer document is now both SEBI and the MCA has relaxed the requirement of dispatch of offer document. It can be sent through email. The other very interesting development which SEBI allowed was online participation in the rights issue. Earlier, the rights issue was only through ESPA facility, but they allowed online participation, which was used in the Reliance Industries rights issue with a great success, where a number of shareholders participated, and shareholders, in fact, congratulated the company that now I can participate in a rights offering sitting at the comfort of my house, and within 5 minutes I can complete a transaction. I don't have to go anywhere else or do anything. So then SEBI has also done its bit financially by reducing their fees by 50%. So number of measures have been taken to facilitate it. The SEBI also allowed that the physical shareholder can participate in the rights issue, which was earlier under the new circular in January. Physical shareholders are not able to participate. So, and there are a number of other relaxations that SEBI has given on the listing regulation side, allowed delay in declaration of results, even the holding of the AGMs. Otherwise, all these fundraisings by, let's say, a quota would not have been possible if we have to follow the earlier system of passing a resolution from shareholders, because there is no way the quota could have mailed out the shareholder resolution on the postal ballots to the shareholders. So allowing all these things to be done digitally is what has allowed the corporates to raise these funds, and we are once again very thankful to our regulators.
Interesting that you mentioned about the kind of the things that the regulators have done in terms to ease the equity issuances during this point of time, and you also specifically mentioned the Reliance rights issue. So, what really have been the key learnings, from that mammoth transaction from rights issue? And since you have gone through that process as a live example, give us some 2 or 3 key takeaways from that.
I think the key takeaway was that how to engage with the investors, okay, in this environment. That is something innovative things which have been done. As I said, an online platform for participation. Secondly, the reach out program to the investors, whether it was through SMS, whether it was through the TV advertisements, whether it was through sending repeated emails to the investors during the process of the IPO, the participation of the physical shareholders, and the other important thing which happened in that rights issue was that for the first time, the rights entitlement was traded on the exchange in the dematerialized form. And what we have seen from the volumes available on the stock exchanges, the huge number of right entitlement traded hands and at a premium. So effectively it gave a platform because since all these activities were enabled to be done from the comfort of your home, it enabled that shareholder who didn't wanted to participate still get benefit of the rights by selling the rights in the market, and the shareholder who wanted to participate had the option to participate. So that was the key learning of this, that how you can do a mammoth transaction with a company with a record number of shareholders, some 27 lakhs shareholder, which is the highest shareholder count for any company in India. That rights issue was completed in a record time, all during the COVID lockdown.
Arindam, you want to add to that, perhaps some of your experience with this mammoth rights issue? Sudhir has kind of beautifully laid out what were the driving levers. What would you want to add to that?
I do recollect that Sudhir's team did, learning for us, at one of our partnership meets as to what all learnings were achieved as part of the rights issue. And that was, truly eye-opening as to how this mammoth rights issue could be completed all during the lockdown period, sitting at your homes, and it was just too much. It was just too much.
Okay. I also want to understand, while it is good to sort of and heartening to mention that, what SEBI has done, what would be your appeal to regulators or policymakers would be going forward, especially the considerations of the given time situation that we are in right now?
I think few things, and there are lots of discussions which are happening with the regulators. One is that in this current environment, there is one product which is very relevant, which is the convertibles, because what company is looking at not to dilute at the current prices. What investor is looking at is that he's not sure how this company will perform, because that's what I mentioned earlier. Earlier I made that point that the investor is looking for certainty, which the companies, unfortunately, no one can give a certainty as of today. So in that kind of product, convertible is a beautiful product, because if the company does well, the investor will convert the shares and company will dilute at a price which is higher than the current market price. And on the other hand, if the company doesn't do well, then the investors will not convert. So it is much easier to sell a convertible in this environment than selling a straight equity. However, in India, we don't have something very similar to FCCB, because outside India, the FCC is one instrument, but on OTC market, it gets traded. The option get traded separately from the debt. And however, in India, we don't have something like that. Say we try to introduce something similar to this convertible in the QIP format, wherein we have seen few deals, but not much. And secondly, is that if the period in most of many of those convertibles will happen in a preferential format, where the conversion is only 18 months, and 18 months is too small a period for an investor to take a view. So something similar to FCCB coming into India will be great. I think the second demand which is there from the corporate is on the pricing of the of a preferential issue, and similarly pricing of the open offers, wherein both are linked. Like pricing of the preferential issue is higher of 2 weeks or 6 months. Now 6 month pricing is going to be at a premium to the current prevailing price. So at that price, no one will come and participate. And SEBI has come up with a circular a few days ago on the relaxing this requirement of 6 months for stressed companies. But the what the corporate is looking at is raising the funds so that it doesn't end into a stress level, and preferential allotment becomes a preferred option in that wherein you can discuss with the investor, lay open your books to the extent you are allowed under law to do so, and uh, tell your story to the world, and thereafter to those investors, and then investor participate through a preferential allotment. But those guys will not participate at a premium to the market price. So if SEBI thinks something on those lines and relaxing the pricing requirements, we will see more action. And similarly, if in the open offer also, in the look back period, if shares promoter has purchased the shares in last 12 months, then we have to take the VWAP. If purchased in last 6 months, again the highest price then becomes a criteria for floor price, which makes many of these delistings or open offer by the promoters unviable, because then that is the price which is uh, 6 months ago the stock may be trading at 100, now it is trading at 50 or 7, which may have recovered to 60, 70. But if you have to pay 100 definitely, then it is not viable at all for the promoter, because promoter was not looking to pay the 52 all-time high prices that were there in the stocks earlier.
Towards that, what SEBI also has done is certain relaxations which they have given. For instance, in an open offer, in a voluntary open offer, where the promoter can go ahead and make an open offer for 10%. And again, we're coming back to the consolidation part. It couldn't have done so if it had acquired shares in the last 1 year. But as part of its relaxations, what SEBI has said that even if they have acquired shares in the last a year, you could still go ahead and make that voluntary offer. So SEBI is of course trying its best to try and get some things to passed on to the promoters and revive the market.
I think one thing that we have not touched upon this conversation is this entire thing about mergers and demergers through NCLT approved schemes and the non-schemes of hiving off businesses. Sudhir, can you sort of take us through some of those conversations that you are seeing with India Inc?
There are various ways you can unlock the value in case of a company. And some of the examples we have seen in the past where a company with multiple businesses or company with two business, one doing pretty well and other not doing so great, and they have those companies have done scheme of arrangement to separate those businesses, have resulted in creation of the value for shareholder. Say for example, Crompton Greaves Consumer being demerged from Crompton Greaves is a great example of how value unlocking can happen through these kind of transactions. So again, in the current environment, it is appropriate time that the corporates think about value unlocking, which can happen through some of these situations of demergers or amalgamations, or some like SEBI sometime back came out with a discussion paper of say there are two companies, both are listed, parent subsidiary relationship, and wherein that you allow through a scheme of arrangement to acquire the listed company to the parent company to issue shares to the public shareholders of the unlisted company, of the subsidiary company, sorry, and still the subsidiary company will, and the subsidiary will become a 100% subsidiary of the parent company. Through this, you are able to ensure that the two listed companies, because in case of a two listed companies under one umbrella, it is always an issue that if there is an opportunity, then which company should be undertaking that opportunity. So those kind of, and many of these situations are historic and not created specifically by those companies. So in those kind of situations that you can try to create the structure which becomes from a corporate governance perspective much better. So SEBI came out with a discussion paper. Hopefully, if SEBI comes out with the regulations relating to that, that will be a great thing, and we will see few transactions in that kind of a space. And we are having a number of conversations with the companies where this whole question of value unlocking is coming through, and I think that discussions will continue even in these times also.
Okay, my last question, before we sort of get the trivia question really is that if you were to advise the promoters in terms of, two things that they should be very careful of during fundraising during these times, what would those really be?
Two things that I will say is that in this, the key I will say is always that in the current environment, cash is the king. So you should have the cash available with you. So that is the first and the primary thing that you should have, both at the personal level and also at the your listed company level. You should have cash, because then you can weather this storm which we are going through. And second is that this whole consolidation and other businesses you should get into only if you have surplus cash available, because how the tide will be, whether at this point of time, no one can say whether this COVID will get over in 2 months, 3 months, or it is a longer term phenomenon. So if in those uncertain times, cash is the king. So keep cash available with you. And in that respect, if there are opportunities that you can raise cash, it is better to raise cash now when someone will be willing to give it to you, rather than reaching a situation wherein you have already reached, the company is facing lots of trouble, and at that point of time, no one will be willing to give cash to you. This is the time for opportunities. Okay, there will be stress, so there will be opportunity to acquire assets which otherwise may not be available.
So, Dee, if you were to sort of name one transaction, it's the most difficult in your career, what would that really be?
No, I think there have been number of transactions, and difficulty, I don't see it. Difficult transactions, I take it as a challenge and an opportunity to learn. So I have learned more from difficult transaction than from easy transaction. Those period in which when you are executing those difficult transactions, you crib a lot. But in the hindsight, I have learned most of my stuff from difficult transaction. So I have no problem doing difficult transaction. I love that.
Okay, fair point. But if you were to name me one transaction, perhaps the most memorable one, what would that really be?
No, when I have to see on the transaction which are memorable one, most of the time you end up looking at the transactions which are marquee transactions. So I had the opportunity to work on like TCS IPO way back. I had the opportunity to work right now on the Reliance rights issues. So these are, I also worked on TCS at that point of time was the largest IPO. Thereafter, I worked on the Coal India, which was again a largest IPO, and now Reliance, which is the largest capital market transaction. So these are the transactions I am proud of being associated with.
Arindam, what about you? You're the most memorable transaction till date.
If you now you would put me in a spot, and if I name a few clients, and if I don't name others, I just might be receiving a few calls. So I'll take a pass on that.
One thing that comes to your mind when I say the following: the global financial crisis versus the pandemic.
Difficult times now, difficult times then. It's just history repeating itself in a different manner.
Thank you, gentlemen. It was really lovely having you, having both of you, and thank you for sharing your time and energy to this. We had a very meaningful conversation today. We struggled through various sort of fundraising options available to India Inc. and very strong piece of advice coming from both of you on key concerns, risks, and preferences for India Inc. Also, the advice for SEBI and other regulators to keep an eye on. Till the time we see you next, goodbye and good luck. And here's wishing you and your family healthy and safety. Thank you.